Welcome back to Investing Talk podcast. Today we're focusing on Inozyme Pharma.
That's right. We've gathered some key materials news on their recent acquisition, the Q1 2025 financials, a due diligence report, and just a general company overview.
And our mission today really is to help you understand the key things happening with Inozyme, what their science is about, and what this big move by BioMarin might mean.
We'll try to unpack the important bits so you can get the picture pretty quickly.
Okay, let's get right to it then. The big news. The acquisition by BioMarin.
Correct. BioMarin Pharmaceutical has agreed to buy Inozyme Pharma. It's an all-cash deal at $4 per share.
And the stated reason is strengthening BioMarin's enzyme therapy business.
That's the line, yes.
Yeah.
Fits their portfolio focus.
But there's a little wrinkle, isn't there? I saw something about a law firm investigation.
Ah, yes. Helper Seda. They're looking into whether the $4 price is actually fair to Inozyme shareholders.
So that could potentially complicate things or slow it down.
It certainly adds a layer of uncertainty. These investigations happen, doesn't always derail a deal, but it's something to watch in the short term.
Okay. Before we get deeper into the deal, maybe step back for a second. What does Inozyme actually do?
Good point. So Inozyme is a clinical stage biotech. That means they're testing potential drugs in people.
And their focus?
Rare diseases, specifically ones affecting bone health, blood vessel function, and soft tissues.
Like what kind of specific conditions?
They're mainly targeting ENPP1 deficiency, ABCC6 deficiency, and also calciphylaxis.
ENPP1 deficiency. That's quite rare, isn't it? Involves problems with calcium.
Extremely rare, yes. It's a genetic disorder where the body can't properly regulate phosphate metabolism, leading to abnormal calcification, really serious health issues.
And their main drug candidate tackling this?
That's INZY 701. It's got quite an interesting mechanism. It targets something called the p-adenosine pathway.
Okay, break that down a bit. P-adenosine pathway.
Right. So this pathway is key for regulating neural balance. In these diseases, it's out of whack, leading to that harmful calcification we mentioned. INZY 701 is designed to essentially help restore that balance.
So a pretty novel approach then, addressing the root cause.
Exactly. It aims to fix the underlying problem of pathologic mineralization.
Okay, let's switch gears to their finances. Q1 2025. How did that look?
Not great from a profit perspective, which is expected at this stage. They reported a net loss of $28.0 million.
And how does that compare to the year before?
It's higher. In Q1 2024, the net loss was $23.3 million. So the spending increased.
Which is pretty standard for biotechs running trials, right? But still, $28 million is a lot.
It is. That cash burn is significant. It reflects the heavy costs of research and clinical development.
And the loss per share followed that trend.
It did. Went up to $0.44 per share in Q1 25 from 38 in Q1 24.
I remember reading they were, quote, quickly burning through cash. That sounds precarious.
Well, the due diligence certainly flagged it. They need to find ways to extend their financial runway into early 2026. This financial pressure likely factored into the acquisition decision.
But wasn't there a slightly brighter spot? Something about their current ratio?
Yes, good catch. Their current ratio is around 2.19.
Which suggests what, exactly?
It suggests they had enough liquid assets to cover their short-term liabilities. So while the burn rate was high, they weren't facing an immediate, day-to-day liquidity crisis.
Okay, so a mixed picture financially. Let's talk clinical progress. The Energy 3 trial.
Right. That's the key trial for INZY 701 and ENPP1 deficiency. The Q1 report mentioned it's progressing.
And that's the one we're waiting on data for. Seems critical for INZY 701's future.
Absolutely. Top-line data is expected in the first quarter of 2026. That's a major milestone everyone's watching.
There was also a management change, I recall.
Correct. They appointed Dr. Petra Duda as Chief Medical Officer, adding more clinical development expertise to the team.
Okay, let's circle back to the market reaction and the acquisition. The stock price was recently, around $5.77? But the offer is $4. How does that work?
That's a really interesting point. The acquisition news clearly boosted the stock, jumping from much lower levels.
Way lower, like below $1.50 before the news.
Around $1.42, yes.
Yeah.
So the jump to near $4 made sense on the announcement? Trading above the $4 offer price now, though? That's likely speculation.
Speculation that the offer might increase. Maybe linked to that investigation.
That's one possibility. Or maybe just market dynamics, arbitrage players, things like that. It introduces some noise.
And how are analysts generally viewing this deal, BioMarin stepping in?
Likely seen pretty positively overall. BioMarin is a known entity, strong in enzyme therapies. Them taking over could be seen as de-risking Inozyme's platform, providing stability and resources.
It feels like part of a bigger trend we're seeing in biotech, doesn't it?
Oh, definitely. Consolidation is the name of the game. Larger companies snapping up smaller ones with promising pipelines. This fits that pattern perfectly.
And for BioMarin, it bolsters their enzyme focus and helps them compete.
Precisely. It strengthens their position in the rare disease space against competitors like Ultragenyx or Election. And crucially, it gives them entry into this specific PPI-related disease area, which is quite specialized.
What about risks associated with the deal itself?
Well, standard risks apply. Regulatory approval is needed for the acquisition to close. And of course, the clinical trials themselves still need to succeed. INZY 701 needs positive data and eventual FDA approval. That's never guaranteed.
But the flip side for Inozyme is getting access to BioMarin's muscle, right?
Absolutely. That's the big opportunity. Access to much deeper pockets, manufacturing know-how, commercial infrastructure. It could significantly speed up development if the science holds up.
It's that classic biotech story, isn't it? Innovation needs resources to get to patients.
It often plays out that way, yes.
Let's touch on valuation again. That $4 offer versus where it was.
Right. From $1.42 pre-news to the $4 offer, that's a hefty premium. Some earlier NPV estimates were apparently closer to $2 per share.
So BioMarin clearly sees significant value beyond those earlier estimates.
It certainly looks that way. They must believe strongly in the potential of INZY 701 and the platform.
And just to clarify, as a pre-revenue company, typical metrics like PE ratio wouldn't apply here.
Correct. You can't calculate a meaningful PE when there are no earnings. Valuation is based purely on the future potential of the pipeline.
So what was Inozyme's unique selling proposition, their edge?
It really was that tight focus on the peptide adenosine pathway for these very specific, very serious rare bone and mineralization diseases. They were trying to develop potentially the first ever treatment for one of these fatal childhood conditions. That focus gave them a unique position.
And the future now, under BioMarin, assuming the deal closes.
The target closing is Q3 2025. After that, Inozyme won't be a separate public company anymore. Its programs, especially INZY 701, will become part of BioMarin's pipeline.
Potentially with much stronger financial backing and developmental support.
That's the expectation, yes.
Okay, so let's try and wrap this up. Inozyme Pharma, with its really innovative science for rare diseases, is set to be acquired by BioMarin. It's an exit for shareholders, yes, but it also changes how these potential therapies might reach patients.
Right. The key clinical trial, Energy 3 for INZY 701, is still the main thing to watch. But now it potentially has the backing of a much larger player.
It really underscores how dynamic biotech is, you know. Promising science attracts these big strategic moves. What's interesting here is how a company focused on such incredibly rare conditions found its path forward through acquisition.
It does make you think, doesn't it? What happens more broadly when these smaller niche innovators get absorbed? How does that ultimately shape the rare disease landscape for patients and for future drug development?
A lot to consider. We hope this exploration gave you a clearer picture of the Inozyme situation. As always, there's more digging you can do if something specific caught your interest.
Absolutely. Always worth doing your own follow-up.
And if you found this valuable, please do subscribe, like the episode, and maybe leave us a comment. We really appreciate you tuning in and engaging with us.